Morning, bro. Were you able to? No, there wasn't any trade yesterday. That's why I didn't stream the US session. Not with my day trading strategy anyway. I did not get any trade. Um, However, I mean, if you were in my session yesterday, then you probably should have taken this 1 to 3 as part of a trend. And obviously, this is another contraction and expansion strategy, and I did tell you guys that watch for this market to come back to around the middle of the box, and that's when you're going to be taking your trade. Now, obviously, this has just started moving in the right direction, so we're just gonna have to wait and see. We might still come back because the market doesn't just reverse on a dime. It might still come back, test this one more before it goes. So in terms of like my day trading strategy, no, I did not take any trade today. So yesterday, sorry, and today we'll see. We'll see what the market does, because it doesn't look like we have much volatility. I mean, my day trading strategy is usually based on volume and volatility, obviously, in addition to contraction and expansion and price action. But mostly it has to do with volume and volatility. If the market is not volatile, if there's no volume in the market, I don't really have any trading opportunities. But yeah, so let's see how today is gonna go. I mean, yesterday I wasn't really expecting the market to be that volatile, because it's Monday and all of that. But today is Tuesday, so let's see how the market is gonna. But in terms of trade, for those of you interested, like this is a very good trade to take on the euro dollar based on the 1 to 3 contraction, and the pound also. I mean, I spoke about this. As long as the market doesn't break this previous structure, that you can guarantee the market is going to reverse. But obviously, breaking this structure is going to change the whole outlook of this contraction. So yeah, let's go, guys. If you have anything you want me to analyze, any questions about trading, let's go. It looks like today is going to be similar to yesterday in terms of just talking about trading and looking at charts and exploring and doing an analysis. In terms of, I'll probably go through some of the currency pairs and see if we do have any immediate trade to take. Dollar yen. I mean, I still maintain the fact that this is a corrective pattern that is going to go to the downside. I mean, I did say yesterday we came into a little bit of resistance there, but that wasn't a trade that I was interested in. So I'm still looking for an opportunity to short the dollar yen. So in terms of immediate trade today, there's no really immediate trade. If you're looking at this structurally, you can say the fact that the market has broken structure, you would expect the market to retrace at some point. But in terms of day trading, I don't really have any trade that gives me an opportunity to short the market. But for now, I'm staying out of the dollar yen. Because none of my strategies are going to work on that. Euro yen on the 1 hour chart. Let's see. Euro yen is probably the only yen pair that is like, oh, it's coming into a little bit of we do have a previous structure high. This is probably an all-time high on the yen, isn't it? Let me look at this market. No, it's not. This is a tricky one on the yen. But I'm looking at the monthly chart. This is a tricky one. Go down to the weekly chart. I mean, looks like we do have a structure here, a resistance structure there. So the market is definitely going to get to that level. It's definitely going to get, I mean, it's not too far off from there, to be honest. It's about, what, 50 pips from that level. So the market will definitely get there. And I think I did point it out that we have a potential advance pattern on this. Excuse me, let me just change the colors on my. Yes, we do have a potential advanced pattern on the EM here, approaching previous structures. So there's going to be a potential for a good short trade on the euro yen, because that's going to put us just a few pips below the old, the multi-year highs. Because this high that the market has set back, this was back in November 2014. So the market hasn't been to that price in over what, 9 years, or close to 9 years. So we do have a potential for a short Gatling pattern on the yen, which is going to happen in about 50 pips. In about 60 pips we're going to have a short, and that's going to be just 200 pips below the 8-9 year high that we had on the yen a while back. So those of you guys that trade advanced patterns, those of you guys that are long-term traders or swing traders, this is going to be a very good short opportunity, considering the fact that the dollar yen is it's probably going to go lower. I think the dollar yen is going to go lower. So yen is probably going to be the driving factor behind this trade. So I'll keep my eye on this one. Probably send it to my trading group as well, for those people who are interested. So let's look at the pound yen. I've looked at this yesterday as well, and obviously I've identified this contraction here, right? I've identified this contraction here against the opposite trend. So we do expect this to come back down at some point. I mean, in terms of day trading on the pound yen, I could potentially be getting my 3-to-1 positive, which is another one of my day trading strategies. So let's see how the market is gonna what I wanted to do. So let's see how the market is gonna behave today. But I could potentially get my day trading strategy, which is the 3-to-1 positive on this one. Moving on to Aussie dollar. Aussie dollar has been non-existent. The volatility on here has been non-existent yesterday. Look at that. Look at what we're doing yesterday. 30 pips. That's the pip range for yesterday on the Aussie dollar. 36 pips. You cannot make money. Like, there's no day trader who can make money when the market has a volatility of 30 pips. Yeah, it just doesn't work. But it looks like we're gonna get a 3-to-1 negative on the Aussie dollar today. But let's see. I don't trade 3-to-1 negative. When I see a 3-to-1 negative, usually that sets me up for a rare Friday trade. So but yeah, it's going to be very, very strange if I go through a whole week without taking a trade. I don't think that's going to happen, because at some point the market will be volatile at some point. And when the market becomes volatile, I will be in, I will take advantage of that. So what's happening with the pound Aussie? really strange that I'm not seeing any 80, 90, 100 pip movement in the market. That's what usually, gets me to trade when I see those kind of movement. But there's nothing, guys. I'm sure you guys that are trading out there, I don't think you must have seen any trading opportunity, any valid trading opportunity, because there's just no volatility right now at all. I mean, for pound Aussie dollar, this is a currency pair that usually does between 150 to 250, even 300 pips daily, and 50 pips today. Yesterday was 70 pips. Like, yeah. So guys, if for me, for my strategy, this is not gonna, there's nothing that's gonna give me a trading opportunity if the market stays that way. But obviously, I don't think the market is gonna stay that way. Because yesterday was just it was a straight one. It was a Monday, so okay, God, where are you going? All this movement, still only 50 pips. There's nothing there. Yeah, I think right now, if you're gonna trade right now, you just wait, because patience is one of the things I always preach when it comes to trading. Patience. You wait for the market to show its hands to you, and then you react. Never act. Never see something happening and just act. That's how you always end up getting into traps. So there's something I call the retail trader traps. When I'm teaching my contraction and expansion strategy to my traders, it's the retail trap. Those are those moves that people just, as soon as they see it, they get excited. They feel shit. I'm gonna miss out. I need to trade. All those moves, yeah. When that happens, you're supposed to just wait, and it's the hardest thing to do. It's really the hardest thing to do in trading. Patience. But that's another thing that comes with experience. Patience comes with experience in trading. I can sit on my hands for a whole week if the market doesn't give me a trade. Because at least I'll start the next week, where I left off last week, and every single week this year we've been making money with this day trading strategy. Every single week, and you guys have seen the results. There hasn't been a single week where I did not make money with this day trading strategy. So yeah, I'm hoping I might get a 3.1 positive trade today. That's gonna be the third one or the fourth one. I usually get one every month, and that wouldn't be too bad. That wouldn't be too bad at all. So Wale, looks like you're the only one in the live chat, in the live stream. How long have you been trading for? Are you a new trader? Are you an experienced trader? New. I want to learn, become full-time trader. Tired of what I'm doing. Oh, okay. Well, that's good to hear. Obviously, my advice to you is just try and just like it's not. That's the thing. One mistake that new traders make. I mean, I did it myself. One of the mistake I made was just trying to learn everything I see out there. You know, just go on the internet, whoever, you know, just learning different things and moving from. And you've got to be careful with that, because sometimes the more knowledge you try to acquire, the more confusing sometimes strategies can be, because there's a lot of noises out there. And but just like I mentioned, or just like I said yesterday, focus on the foundation, because the foundation is structure. If you're gonna learn, if you want to be a full-time trader, trading technical analysis, you know, the most important thing you can do for yourself is understand structure. Don't learn a strategy, don't just understand structure, because that is the foundation. Once you understand structure, price action, you know, then it's a lot easier. Any other strategy that you get, you just have to, because you cannot rely on a single strategy. Like I said, you can't rely on a single strategy. Every single strategy out there will only win you about 50 to 60% of the time. And if you're gonna use that strategy to trade, then you're gonna have a really long and painful road ahead of you, because you're gonna go through a lot. Because that's the only way you can build your experience, you know, and build the psychological part of your trading. Because, you know, strategies like that will, you know, it will make you go through like losing streaks, blowing off accounts, losing money. So, but the moment you have a foundation of understanding structure, I'm not saying you're still not going to blow your accounts. No, that's not what I'm saying. I'm just saying that it's not going to be as frequent. Because in the beginning, it's always hard in the beginning. You're always going to go through moments where you will do that. It's going to happen. It happens to everyone in trading, you know. The beginning is hard. But try to make it a little bit, you know, easier, not too hard on yourself. So, yeah, that's my only advice to you, that just understand structure, just learning, because that is one way that you can just, you know, and analysis is, you know, because when it comes to trading, I mean, before you enter every single trade, you have to be able to analyze the market properly. Now you have to be able to analyze the market properly. So you're welcome. You're welcome. Just yeah. So yeah, it's not. Very strange what's happening if there's no volatility in the market. Very, very, very strange. So let's just focus on, yeah, this is yesterday's trade. Looks at the market. What about, am I based in London? I'm based in West London. Southwest, West London. I think that's the best area to live in London. What about you? So yeah, looking at this is gonna be, we're gonna go high on this rate. We have to. Oh, you in Leeds? Oh my God, I've got a friend of mine who lives in Leeds. I actually went to visit him. Was it last year or the year before? Yeah, I've got a friend of mine who lives in Leeds. I don't know if you know a place called, is it Armley? Jesus Christ. I'm gonna forget the name of this place. Yeah, it's quite far from the city centre. It's about like half an hour walk from the city centre. I think it's Armley. A place called Armley. It's a rough area though. Oh, you know Armley, yeah. So that's where my friend is. Yeah, I went to visit him last year. I think it was during summer or after COVID, I think. I'm gonna write down my email on the I think my website. Okay. So that's my website, and I mean, I think the link should also be in the description. I'm not too sure. Um, yeah. Okay. Yeah. Talk to you later. Have fun at work. I mean, well, you don't really have fun at work, but yeah, I hope you have a good day. Yeah, definitely feel free to join tomorrow morning as well. Okay, where's my Yeah, I just realized when I said that, I just realized, yeah, you don't really have fun at work. I mean, some people do, but yeah, um, yeah, work is just a way of surviving, really. Um, but yeah, I will be streaming the US session. I mean, if maybe at break when you're on your break at work, you can feel free to join in if you can. I just feel like there's more people in the US session because it's almost like a lot of people trade the US session more than the UK session. It's quite strange, but Yes, welcome to the live stream. If you're just joining, yeah. So for day, haven't taken any day trading today, and yesterday as well. Did not take any trade yesterday. However, I did looked at a couple of currency pairs yesterday that had a potential trading opportunity. I think this is the pound US dollar. I think if you watched my live stream yesterday, you would hear me say that as long as we don't break this structure down here, then the market should continue going up. And also on the euro yen, middle line of the box. This is a classic 1 2 3 contraction. 1 2 3 contraction. Market breaks out, returns to the middle line of the box. This is where you get your trade. This market should now rally to at least the 127 Fibonacci extension, which is going to be somewhere there, and it should give you a risk reward ratio of about 2.52 or 2.61. That's what contraction and expansion strategy does. That's what 1 2 3 we know as part of a trend, as part of a 1 2 3 is part of a trend. If you understand how to trade this strategy. As far as my day strategy goes, still waiting for any kind of volatility, because the market hasn't been volatile in the last couple of days. There's just no volatility at all. Guys, if you're just joining, welcome to the live stream. If you do have any questions, anything you want me to analyze, any chart, any currency pair, anything, you can put it on the live chat. I can see all the messages in front of me, and yeah, there isn't any day trading today, simply because the market isn't that volatile. I mean, if you've been looking at the markets over the last couple of days, you will see we're not getting any kind of volatility, and obviously my day trading strategy, is based mostly around volatility and volume, and obviously, the foundation, the contraction, the expansion. But right now, at the minute, I'm not getting any volatility in the market. So hopefully it's gonna wake up during the US session, because if it does, then I'll probably stream the US session today. So, but for now, we're just kind of looking at this trade that I talked about yesterday in the live streaming regarding the 1 2 3 expansion, where I did say if the market comes back to the middle line of the box, this is a trade you would want to be taking, because that's how you trade 1 2 3 as part of a trend. And obviously we know this market is trending, is bullish on a higher time frame. Even if we zoom in, we can see the market is bullish. So I expect this market to continue going higher. And also on the pound, I think I talked about this yesterday as well, when I said as long as we don't break this structure here, then you can expect this market to go higher, because this is a bullish structure. And a bullish structure, if the market stays above the previous outside return or the starting point, because this is going to be a new starting point now, you can see the market clearly hasn't broken that line, so you can expect the market to go higher. But obviously if the market comes back and break this line, break this structure, then everything is going to change. The whole trend direction is going to change. That's how you can spot a change in direction of a trend, if you understand structure, because this is all solely based on structure, contraction and expansion. And yeah, so guys, put your questions in the chat, and or if you want me to analyze something, I'll go over it now, definitely. And obviously this one, because this is a bullish structure trade, as soon as the market breaks above this previous structure, that's where you want to be taking your profit. So this is kind of different in terms of how you take your profit on a 1 2 3 contraction, as opposed to how you take your profits on a bullish structure. Bullish structure is all about the previous structure. If market goes to the previous structure, you don't want to be in that trade. I mean, you're still going to get a 2 to 1 risk reward ratio, which is still very good. Guys, I don't see you guys talking on the live chat. See, there's no trade. Let's How many pips till now? What exactly are you asking? For the year so far with my day trading strategy? Or you mean today or this week? This week so far I haven't taken any trade on my day trading strategy. But in terms of pips till now, I think for the whole year, probably around 8,500 and something. As you can see, we've got the win-loss ratios and the results for the whole year. Day trading every single day, and I've been streaming for the last 2 weeks as well. So you can probably watch the videos and see all the trades I've taken for the last 2 weeks using my day trading strategy. And in terms of all these trades I've streamed on YouTube live for the last 2 weeks. Yeah, so just the 1 loss to 7 wins and 641 pips for this month alone. And you can rewatch all those trades on YouTube. Today, this week, I haven't taken any trades. Still waiting for the market to give me an opportunity to take a trade. Just because yesterday there wasn't any volatility in the market, and my day trading strategy, relies heavily on volatility and volume. And yesterday I didn't get that, so we'll see how the market is gonna move today. But I'm just looking at the couple of trades that I showed you guys yesterday. I don't know how many people were in my stream like yesterday and watched it and probably took advantage of these trades. But yeah, so this was the one I talked about, the 1, 2, 3 strategy, where I expected the market. I think I even talked about this in my in my forex market preview, the video I put over the weekend, that expect this market to come back down to the middle line of the box, and that's why you expect to take a long trade. And yeah, so for those of you guys who have watched it, who have taken the trade, well done. I mean, a lot of people actually missed this one, because I 2 weeks ago I did tell you this, you can expect this move as well. So those of you who have been watching my video for the last 2 weeks have taken this trade, and some of them are probably in this trade as well. So but as regards to me with my day trading strategy, so far there's nothing. So we just have to wait and see how the market is going to progress today. And this is another one as well yesterday when I talked about this contraction, and I said just pay attention to this contraction, because if the market doesn't break this previous structure, then expect the market to go up, because we have a bullish structure here in addition to a contraction channel. And you're welcome, beginners traders Aliyami. Are you really a beginner, or you have some experience in trading? I want to get to know the people that are watching my video. Let's how long have you been trading for? Aliyami, I hope I'm saying your name correctly. You're a beginner, okay. And how are you learning to trade so far? Are you just watching videos on YouTube? Are you just reading about things on the internet? 1 year, okay. You're a loser. Well, it happens to everyone at the beginning. But yeah, my advice to you is just try and be a little bit careful in terms of how you go about learning how to trade and stuff. You have to be very, very careful about that. Just watching and jumping here and here, yeah, that's not a good way to go about it. That's not a good way to go about it. Why don't you drop me an email? Go to my website, the link is in the description. Drop me an email, and maybe we can have a conversation. We can have a conversation. We can talk about and see how I can help you. Because the one mistake you can make as a beginner trader is when you try to get as much information as possible, because you have to be careful. Too much information can be can be bad. I mean, too much of everything is bad. So if you're getting too much information, and you're trying to try this and try this and try this, you're not really gonna get anywhere. So yeah. So yeah, get in touch, and let's see how I'm gonna be able to help you, because yeah, you have to be able to. Hopefully, I can put you on the right direction, because that's what every beginner trader needs. If you don't know which direction you need to go to, it just makes things too difficult, you know. So yeah, so drop me an email. We're gonna schedule like a meeting over, Google Me or Zoom or whatever, and then you're welcome. You're welcome. Um, and yeah, and just keep tuning into to these live streams. It's probably gonna help you. I mean, I do teach occasionally. I do explain a few strategies. I mean, just like yesterday's session, and I do a lot of analysis as well. The most important thing, I think, as a technical trader, if you're learning to trade, is understanding structure, the foundation of forex market. Because if you don't understand structure, I'm talking about the very, very basics, then any other thing that you learn in trading, any strategy that you learn, is just going to end in disappointment. Sometimes it might work for a while, but then the losses are going to come, and you're going to blow your account, and then you're going to move on to the next thing. It's a very, very painful journey, so you have to be very, very careful how you decide to go about learning how to trade. And patience is important. I cannot stress how important patience is when it comes to trading, guys. Like, how many traders can you see? How many, I mean, ask yourself this: you beginner trader, like, have you ever, like, just sat in front of the computers for a couple of days just watching the market, just because you don't have any there's no trade that fits your plan, your strategy? Because this is what you're seeing me do, guys, for the last couple of days. Just sit and wait. If the volatility comes, I take a trade. If I don't get no volatility, I wait till the US session. But I'm sure today the market is going to be quite volatile today, especially when we get to the US session. I expect the market to be volatile. So maybe not during the UK session, but Am I in this trade? No, I'm not in this trade. Not with my day, because this is not a day trading strategy. This is a swing trading strategy. My traders are in it because I've already sent this to them. But when I stream on YouTube, when I'm streaming on YouTube, I only stream day trading. Like, I don't try to combine strategies or whatever. It's strictly day trading. And I mean, it's unfortunate that you're just joining me today, because if you've been with me last week especially, or the week before, every single day for the last 2 weeks I've been in a trade. So every time you see me streaming here, I was always in a trade. But that's using the day trading strategy. My day trading strategy, I've got 7 strategies that I trade, mostly runner, extended runner. These ones, if you watch my videos the last 2 weeks, you're gonna see most of the trades that I've taken on that one. But my day trading strategy has to do with volatility and volume. Largely has to do with volatility and volume. And if the market is not volatile, if there's no volume, I'm probably not gonna trade. So, and that's what happened the last couple. I mean, yesterday was Monday. Mondays are kind of 50-50s anyway. Sometimes the market are volatile, sometimes they're not. And yesterday the market wasn't volatile at all. And but this is based on structure. This is a contraction and expansion strategy that I teach, and this is purely based on structure. And if you are, you know, one thing that you have to realize about trading Aliami is you have to be able to choose a method that suits your personality in a way. That's what trade. That's one. So a lot of people will not tell you this about trading, but you have to be able to choose a method. What kind of person are you? What kind of are you the, you know, are you looking to go in and out of the market and make a profit within a certain day, or are you someone that, you know, once you take a trade, you can hold the trade for a couple of days, 3 days, 4 days, a week? You know, it all depends on that. You know, some people like can't handle swing trading, leaving their trade open for a few days. Some people can't handle that. Some people prefer to just go in and out of the market, and I'm more of the second people who prefer to just go in and out of the market. That's why I trade day trading mostly. That's my strategy. And this week you will see me take a trade this week. I'm not gonna go through the whole week. The market is not gonna go through the whole week and not be, you know, not be active. So you will see me take a trade this week, and most of my trades, like I said, I'm in and out within a day or two, mostly within a day. So yeah, but this strategy is based on structure, which is the one where you can understand the forex market. And so yeah, it's very important. I mean, I don't know how much you know about structure, which I told you is the foundation of trading. And let me give you a little bit of a lesson here, and you're gonna see. So the first thing you need to know about trading is you need to be able to, because trading is based on you don't know anything. Yeah, I can see that. Yeah. But like I said, it's structure is the most important thing. So I'm gonna give you a little foundation here that's gonna, hopefully is gonna, I mean, this is, you know, you can't use this to trade, but this is gonna give you a better perspective in terms of how you analyze the market, or how you see market. It's gonna change your focus a little bit. And everything in the market starts with this structure. And when it comes to the forex market, when you look at a chart, so when you look at a chart in the forex market, a chart can either be bullish, it can either be bearish, or it can be in consolidation. Those are the 3 different structures that a chart can be. And understanding each and every one of these structures is how every single strategy in the forex market comes to be about. So if you look at the market, if the market is bullish, it has certain characteristics that the market sticks to. And if the market is bearish, the same. And if the market is on consolidation. So first of all, you need to be able to know what a bullish market is. You need to be able to know what a bearish market is. And you need to be able to know what consolidation is. Because knowing all those three different structures is going to be able to open your mind to the possibility of understanding how a strategy works, or how you can trade a strategy, or how you can, whenever you're trading a strategy, how you can know. Because the thing about these three different structures is the market can interchange between those three structures at any given time. So you have to be able to understand when that happens as well. So when you understand structure, you're going to be able to know that, because sometimes you might be using a strategy that is good for a bullish market, and then the market suddenly changes into consolidation or goes into, you know, bearish market. So you need to be able to be aware when that happens, then you can be able to adjust accordingly, because it's all about trading is about reacting. You don't act, you react. You wait for the market to do what it needs to do before you act. And when I said the foundation is structure, three different structures. We have bullish market, bearish market, and consolidation. But bullish market starts with a bullish structure. To understand bullish market, you have to understand what a bullish structure is. Like I said, this is just giving you a foundation. This does not, you know, tell you how to trade or anything, but this is just foundation. Bullish structure. So what is a bullish structure? I'm gonna draw what a bullish structure look like. So I'll probably use the last 15 minutes of this stream to explain what a bullish structure looks like. So I draw a picture like this, and I tell you this is a bullish structure. But if you were to go to the charts and look for a structure like this, you're probably gonna find one. So that's not very helpful, is it? It's not very helpful. Why? Because what I drew right here is a symmetrical and a perfect structure. It just looks good. But one thing you have to learn about the market doesn't care about perfection. It doesn't care about symmetry. It doesn't care about looking good. The market cares about rules. So let's label these parts of this structure. So we got the point here. I'm gonna call it starting point, or SP. And then we have initial structure high here, because the market makes an impulse leg, and then, you know, it starts from somewhere and it ends somewhere. Where it ends is the initial structure high. But I'm going to use abbreviation because this is going to be a little bit messy. So I'm just going to label it ISH, initial structure high. And then the market, after an impulse leg, after the market, right, you know, you can look at the chart, you're gonna see this. The market doesn't go up in a straight line. It goes up, comes down a little bit, goes up, comes down a little bit, or it goes down, come back up a little bit. You know, this is all the different types of structures explained. So we're talking about a bullish structure. We have a starting point, impulse leg, initial structure high, and then we get something that's called either an outside return, a retracement, or a pullback. You're gonna hear lots of people use this. This is the foundation that people tend to ignore when they're learning how to trade. Because if you understand this, so just pay attention to this, and I'm guarantee you're gonna get something. You know, your mind is gonna start to work in a different way. So we've got this pullback, and I'm gonna call it outside return. But like I said, you can call it pullback, you can call it retracement, whatever you want to call it, but I'm going to call it outside return. And then after that, the market goes up and make another high, another impulse leg, and we call this the new structure high, NSH, new structure high. Now obviously, like I said earlier, this is a bullish structure, but this is perfect. This is symmetrically beautiful. It just looks good. But then the market doesn't care about looking good. It doesn't care about perfection. The market cares about rules. So I'm going to tell you the three rules of this structure, because once you know the three rules of this structure, you can go to any market, you can look at any chart, and your eyes are gonna start opening. You're gonna be able to see things like that you've never seen before. So the three rules of this structure, two of the rules have to do with the outside return, and one of them has to do with the new structure high. So the outside return, the first rule of the outside return is that, so okay, I'm gonna use a Fibonacci retracement here, but this is a tool where, since you said you don't know anything, it's gonna be very hard to explain to you what a Fibonacci is. But for now, just know that a Fibonacci is just a retracement. It's just a tool that has kind of numbers. The whole Fibonacci is a very, very kind of wild, it's a very complicated, complex field that if you ever have time, go and read about it, and you're gonna see it's gonna blow your mind, because a lot of things in nature use these numbers. Even the flowers, the way the lines on a flower, are arranged. The little lines that you see in the middle of a leaf or whatever, they're all arranged based on the number, the Fibonacci ratio. So once you understand, the Fibonacci ratio is very complicated, but I'm not going to go into that. But for now, just know that it's just a tool that has lines in the middle, and we call the retracement lines. And these lines have numbers. We have 382 Fibonacci retracement, 50% Fibonacci retracement, 618 Fibonacci retracement, 886. There's different numbers. There's the extension and there's a retracement. So the first rule of the bullish structure, or the first rule of the outside return, is the outside return must retrace to at least the 382 Fibonacci retracement. So we've got the 382 retracement. So once you draw your Fibonacci from the starting point to the highest point, always from swing low to swing high, from the swing high to swing low, and then you look at the numbers in the middle. So initial structure high, you're looking for the outside return. It has to come into the 382. You can see the market clearly, went past the 382 retracement. You just needed to touch it. If it passes the 382 retracement, that's fine. But you just needed to touch the Fibonacci retracement. So once you get your retracement, this is the first rule of the bullish structure, or the first rule of the outside return. So the second rule now is that the outside return cannot go beyond the starting point. It must not go beyond the starting point. So I'm going to put the starting point here. So what we're basically saying is this retracement, this outside return, needs to touch the 382 Fibonacci retracement. It has to. It can go past it. If it goes past it, then it must not go beyond the starting point. So what I'm trying to say is, it's almost like we've created a zone. So between the 382 Fibonacci retracement and the starting point. So we have like a zone here where we're saying that this is where the outside return needs to be. Now this is very important, because if you understand this, and if you go on the chart, try to look up a bullish structure on the chart, you're going to see structures where the market, this outside return, because the market only cares about rules, this outside return can be here, it can be all the way down there, it can be anywhere between down. So it's never the same, and every single structure, it's never the same. But the market only cares about, because the market only cares about the rule, because if the market comes down, touches the 382, according to the market, it's already fulfilled the rules of the outside return. So it can decide to go off from that point and make the next impulse leg. Sometimes even if it touches a 382, it's going to be like, okay, no problem, it's going to keep going. As long as it stays above the starting point to the market, yes, it's enough, and then it can start going back up. So this rule is very important. So now we move on to the next part of the bullish structure, the next rule of the bullish structure, which is to do with the new structure high. And this is the rule of the new structure high, because this is very important as well. So the new structure high of a bullish structure, any part of this candle, any part of this impulse leg has to just go beyond the initial structure high. And this is very important. Like any part, we're not talking about the body of a candle, we're not talking about the candle breaking and closing above a certain point. You probably don't know about candlesticks since you said you just started trading, but candlesticks, I mean, if you see my charts, they're all based on candles. I use candlesticks. But any part of this structure, so if the market can go here, and then if the market just, you can see that this line is clearly above the initial structure high. This is a bullish structure. To the market, that's a bullish structure. So you can go on the charts and you can see something that looks like this. And believe it or not, this is very similar. I wouldn't say very similar. It's exactly the same to. It's exactly the same as this. And it's exactly the same as this. These three structures are exactly the same to the market, even though they don't look anything alike. This is the rule of imperfection. To the market, exactly the same, because it's all about rules. It's nothing to do with how pretty it looks. It's nothing to do with the shape of it. It has nothing to do with. It's all about the rules. So when you go, next time you go on the market, you're analyzing charts, you're looking for a bullish structure, just follow the rules. Don't follow don't worry about how it looks. That has no impact at all on what a bullish structure is. But at the beginning of this, I told you that a bullish market starts with a bullish structure. So how does this turn into a bullish market? Well, the minute you get a back-to-back bullish structures together, then you have a bullish market. So what we're saying is the next move of this market is going to be another outside return, and that outside return needs to follow the rule of the bullish structure, the rule of the outside return, which is coming into the 382 retracement and staying above this line. So this can come in here and you get another move here to form the new structure high. And you have a bullish market. This is a bullish market. Forget about prettiness. Forget about how good something looks. Just forget about that. You're welcome, Aliyami. Because if you need more help, just drop me an email on my website. The link is in the description. Just go on the website, scroll to the bottom, send me an email, and we can talk about how I'm gonna help you on your trading journey. But really, the most important thing is the foundation, understanding. This is I cannot stress that, because there's so many people that think they're traders, but they don't really understand structure, and this is very, very important. So drop me an email if you need help. Maybe I'll put you in the right direction. We can have a discussion, and you don't have to, I'm not going to charge you for having a discussion or talking about your trading, but we're talking about structure, and we're talking about bullish structure rising into a bullish market. Because we have three different structures: bullish market, bearish market, and consolidation. And the key to understanding how to trade is understanding how each and every structure, what it is, how it behaves, what are the characters, what are the rules for every structure. Because every single strategy in this, as every single technical analysis, technical strategy comes from understanding how all these structures behave. Like advanced patterns is one of the strategies that I trade, but advanced patterns are very, very successful when the market is in consolidation. Because once you understand what a consolidation is, you're going to see exactly why advanced patterns are very successful when the market is in consolidation. And contraction and expansion is a trading strategy that I use for trending markets, bullish markets, bearish markets, So there is a lot that there is a lot to learn when it comes to trading. So just give yourself a very good foundation, because it looks like this is the second person that's watching my live stream that is also a kind of a beginner, which is, it's fine. You've got to start your journey somewhere. You can't just become, nobody's born a professional trader. You start your journey somewhere. But you have to be careful, because with trading, the moment if you go in the wrong direction, it can be a painful one for you. It can be really painful. And the reality is, like I say, you can go out there, you can learn every other strategy that you want. The thing that you need to have an edge in trading. You need to have an edge. So I hope that was explained myself there in terms of the bullish structure and everything. So yeah, keep tuning into this live stream, and tomorrow we're gonna expand a little bit in terms of like understanding what the other consolidation or even bearish markets, or just looking at how that gives rise to like this thing that you see here. Is all this 1 2 3 strategy is, it all comes from understanding the bullish market and the cost structure. So maybe we're gonna explore on that tomorrow. But if you understand this strategy, like I said, we get a break here. This is where you don't try to sell, because this is where most retail traders sell the market here. And when you look at the chart, most of the times you're gonna see, as soon as the market breaks, this is a sign of communication. This is no sign to trade. A lot of traders will learn, oh, the market is going higher, fear of missing out. And you're going to look at the chart so many times. You're going to see a lot of times that the market, after breaking this, it immediately comes back down. Obviously, we didn't get that on this trade, but still, the best place to buy it is always waiting for the market to come back to the middle line of the box. Why the middle line of the box? Because the strongest part of any structure, the more times a market tests a particular structure, the stronger it is. That's what we're saying. We're talking about resistance and support. If a resistance line has been tested like 10 times, then that resistance point line, that resistance structure is stronger than any resistance line that has been tested less than 5 times. It's just simple logic and understanding structure. So just like in this case as well, you look at this market, if you draw a line through the middle of this market, you're going to see that line touches all the structure of these 1 2 3 structures. So that makes this point the strongest part. And if you analyze charts, if you analyze market, you're going to see 9 times out of 10, the market always comes back to the middle line of the box. That's the best place to get your trade, because you have a structure of this. This is not a place to get your trade. This is just the market just, like I said, it's just a communication. The market just telling you, listen, I'm about to do something. Once it breaks out of this structure, I'm about to do something. This is when it's going to do something. You don't act here. You act here. You wait for the market to do what it needs to do, because the thing is that the profit you're going to get from this trade is always going to be bigger than the profit you're going to get from here. Because if you were to take a long trade on this market here, let's say you took a long trade when the market broke that structure, right? Your stop loss will always have to go below the previous structure, 100%. Your profit would have been, the risk to reward ratio on this trade would have been less than 1 to 1. And you trade like this, you're just going to end up blowing your account after account. Compared to this, you have a risk to reward ratio of almost 3 to 1. So with this trade, you only have to win, what, 50% of your trade to be profitable? With this one, you have to win 90% of your trades to be profitable. So yeah, there's little changes, little things that, if you understand it, those little things, because that's why I said trading is full. You need to have an edge. No matter how good a trader you need to have an edge. There has to be something that that gives you that little bit of extra edge over most people. Most retail traders, majority of the traders will be taking a trade here. The edge that you have is the patience. You wait for the market to be patient. You get a better risk to reward ratio. You take your trade. That's the edge. That's why I keep saying, like, trading is almost like I don't know if I've said it before, but I compare trading to tennis. I don't know if you guys watch tennis, professional tennis matches. There's over 200-300 professional tennis players in the world, but it's only a very, very small group that consistently win. It's not because the better, people use the word better tennis players, but they're all professional tennis players. They all can play tennis. But what's the difference? The mental edge. The mental edge. So that's why you need what you need in trading. You can't just be a professional tennis player and just expect to win Grand Slams, to win Masters 100, Masters 1000, and all of the big tournaments. You can't. You have to be able to have that edge. Those little edges, it comes from understanding how the structure of the market works. So never ever underestimate that, guys. Never. So I think I'll be ending the UK stream, unless anyone has any questions, anything you want me to elaborate or explain further. Put it on the group. Or else I'll probably end in the stream in the next 5-10 minutes, and I will probably be streaming the US session because I expect the market to be volatile heading into the US session. Yeah, so we have to wait and see on that. Yeah, so and as always, if any people, any of you guys out there, if you need any kind of help with your trading, just drop me an email on my website and we'll talk, and let's see how I can help you. Okay, it doesn't look like guys, any questions before I end the live stream? Because I will try and stream during the US session, definitely. And let's see how the market is gonna. So hopefully some of you took this trade, or this one as well. If you did, then well done, because it looks like the market is going that direction. Almost 72 pips so far. So come on, guys, I'm sure you have questions, charts you want me to analyze. Put it on the group chat, or else I'll end the stream, go have some breakfast and get ready for I do have a couple of students that I'm gonna teach in the next 2 hours, so hopefully I'll be done with my lesson before the US session. Yeah, I mean, if it was up to me, to be honest, I would be streaming for the whole day, because it looks like it's very productive and helpful to a lot of people. I would stream for the whole day, but because I've got students to teach, I've got lessons that I'm teaching, so that's why I can't stream for the whole day. But obviously I try my best to stream at least 2 hours, 2-3 hours a day, so hopefully it is beneficial to you. But anyway, I think I'm gonna end the stream, so I don't think you guys have any more questions. So I'll probably stream during the US session. It just remains to be seen how volatile the market is going to be. And so in that case, I'll see you guys later.